How's it, Dave? How's it going, man?
Did your internet drop
I'm
the
very
second
good,
we
and you?
started? I'm all good, man. All good.
Did you have a good
Glad
weekend,
for.
Dave?
No, it was terrible. It was freaking awful. Um,
I did it.
it it was
Typical,
like
actually. What can I say?
37,
It's
38
called.
degrees here in Cape
It's,
Town.
is it why?
Why was it hot in Cape Town? Andrew, your internet's completely gone again.
That's beautiful,
Um,
man. You should be on the beach having a cocktail.
yeah, with the 100% beach occupation that we had, with all the people. No, I
Uh,
was in the
my
CBD.
internet is gone. Why does my internet
Yeah,
keep dropping?
uh,
Is it
I
is it
was in the
called
CBD
Edenville
for
Internet?
lunch. Yeah, it is. I was in the CBD at lunch doing some venue inspections on Saturday,
I
and it
know.
was
I'll need to
42
get
degrees in the
plug it in.
CBD.
Okay, I'll plug it in.
Completely out of sync. How's it, guys? How's everyone?
It's
Let
tough.
us know if you're here. Say hi in the chat box. Let us know where you're joining from. Andrew and I, once Andrew's internet gets a little better, we'll start to have proper
Yeah,
conversations.
that is tough, eh? That is, especially when you're having properties in the hot in the car. But
No idea where it
yeah.
is. How's it, Jean Paul? How you doing? Good to see some of the regulars. Guys, if you're here for the first time, let me know.
I am just
Uh,
trying to sort the internet out, Dave. So tell everyone what is happening
yep,
this week and see who's
yep,
joining us while I sort out Edenville
I
Internet.
got this. So, guys, if you're joining for the first time, let us know. This is Coffee Chat with Andrew and Dave. We're here every Monday, 1 o'clock until about 1:45, about 45 minutes. So, what we'll do is I'll run through some of the formalities, talk about what's happening this week, what events are going on, what there is to look forward to. How's it, Dan? Good to have you in. And then Andrew and I will have some opportunities for some questions. Today, we've got Careen Mckinon from Uber going to be joining us. Careen's going to be available to take some questions in terms of home loans, bonds. If any of you have questions about home loans or bonds, you can put them in the chat box and I'll save them for a little bit later. Let me maybe quickly get into what's happening in the world of property this week, what's happening with our events, and we can get into it. Sorry, I just got to get the view up. Andrew usually talks a little more before I can get straight to this. So today will be one of the first weeks where we are back to proper events. So it'll be our one and only networking event online this week. So Wednesday night from 6:30 until about 10, we'll be running networking event online virtually. That's via Zoom. You'll find a link in the chat box in a few seconds. Like I said, this will be the last time we're doing a virtual event. So going into Feb and March, you'll start to see us returning back to Joburg, Cape Town, Durban, Bloemfontein, Potch, PE. We're going to be going back to in-person events, which is fun and exciting. So guys, let us know if you're excited to go back to in-person events. Let me know where you are. It'll be really good to see you guys in person. After the networking event on Wednesday night. Thursday night, we got our coaching and legal support webinar. So that's for our intermediate and professional members, as well as anyone who's on our courses. You guys can join our support webinar that runs from about 6 o'clock, usually about an hour and a half, about 7:30. And again, it's a really good opportunity that if you want some one-on-one time with Andrew and myself, you can fire up questions, you can load questions onto our spreadsheets, and we'll sit there and talk about that. Last but definitely not least for the week, Andrew, you've got a full day workshop on Saturday. So maybe you want to tell us a bit about that. But it's going to be full day, so from 9 o'clock until about past lunchtime.
Yeah.
Free for anyone who wants to attend. Andrew, who do you want there? What are we going to be covering?
Yeah, so on Saturday it's going to be for our free members, Dave, and the foundation members. So it's really giving them guidance as to how to get started in a property, how to all the different options with regards to funding solutions. Because people always say, how do you get funding? But what kind of type of funding are you looking for? Are you looking to get started, creative seller financing, JV financing, angel financing? Are you looking to go to Uber? Are you looking to go to ABSA? So I'm really going to break down the finance section this Saturday, as well as get Bruno and Shirley Boy involved from a tax point of view. So for those of you that have a few properties or you're getting started, what structures should you be investing in? As two of the most common questions we get is, Andrew, how do I get started in terms of what structures should I be using? And talk to me about all the different property solutions, funding solutions out there. And then Dave, I've got a game I'll be playing with the guys. I'll make it fun as well. There'll be some regular breaks. It's a really cool chilled out workshop on Saturday. So if you're a free member, or you're a foundation member, then this workshop is for you. So join us. And apologies for the technology. Dave, how does it work where I've got fiber installed and the fiber doesn't work, and then my LTE works? Like, I don't get it, Dave. Don't get
Andrew,
it.
if I'm not mistaken, your fiber is provided by Telkom
No,
or
Vodacom.
Vodacom. Wow, I don't know.
Vodacom business, but it didn't work, so I changed it. I got a brand new line. They put a brand new line in for me for personal, and that still doesn't work. So I don't know.
Then it might be your laptop, because your phone is fine and your laptop is still showing in red.
Yeah, maybe that is the story. Maybe it's the Apple again. Bloody hell. Anyways,
Jean-Paul, don't try give excuses. It happens every week. The second we go live, maybe you're watching too many streams at home, Drew. Maybe you've got the Facebook page
maybe,
or something.
Maybe. So there we go. I've got a good excuse. There's a fiber outage in Edenvale. There we go. Edenvale incident. I told you.
No.
Cool, but I think let's see who's with us there, Dave. I'm going to go through for the first time now. Khomotso's on there from Joburg. Good to see you. And Safiso, Happy New Year. A long time, man. Let's catch up. Bapile's on there from Derbs. Good. How's everyone doing? Dave, I know you greeted them earlier as well. We've got Seba on there, if I've said it right, and Jean-Paul. Guys, let us know, what are you all up to these days? Who's busy buying a property? Who's looking to purchase? Who's expanding? Let us know who you are. Like Dave said earlier, this is the coffee chat that Dave and I do every Monday at 1. Some weeks we have guests, other weeks we don't have guests. And the one guest that we're hoping to have today is Uber, Careen, who will be joining us shortly, and we'll talk to her about what's happening with Uber and finance, and are we seeing more applications being granted or less, and are those predominantly first-time buyers or the investors? What success rates are banks having with regards to investors buying through limited companies? You know, we're busy dealing with an estate agent, Dave in Durban, who's saying that you cannot buy a property through a limited company unless it's been trading for 3 years or more. Now, yes, if you want the business to stand surety for the loan, it's a different conversation. But if you are self-employed, employed, and you can prove affordability, you can still get a loan through a bank, through a limited company that you've just taken off the shelf. Dave, would you agree with that?
Yeah, 100%. It can just have a little bit of extra admin to go through the process, but otherwise, yeah, it generally works like that. Off the shelf is an option. I've generally avoided them in the past because they're generally priced quite aggressively for that feature. But yeah, it entirely comes down to what other financial sort of flows you have to use as leverage.
Exactly. And then some of the bank's policies, Dave, that we've seen, the bank's policies might be like, if you don't bank with that bank, their policy might be, we only do 90% loan to value. So what we tend to do is, even though we're looking for 100%, we actually go in at 90% to get the yes, and then we motivate for 100%. So sometimes you apply for 100% with a different bank that you don't bank with, and that banking policy might be that if you're not their customer, they automatically reject it because you're applying for 100, the policy is 90. So the strategy that we found that works is find out what the bank's policy is and go in at that loan to value, and then let Uber go and motivate it up. That's some recent experience that we've had recently. So just to share it with everyone. I think what will be really good, Dave, if everyone can let us know what the biggest challenge to finance is, funding. So all of you, Denzel, good to see you there. Tandeka, you're expanding your portfolio, but everyone, Lerato, Jean-Paul, Justin, what stumbling blocks have you come across, and what finance stumbling blocks are you facing right now? Is it just affordability? Is it I don't know how? Is it I can't get finance because of whatever? Share some experiences, share some stories. This is a platform for all of us to learn. I'd really appreciate it, guys. Lerato, good to see you there. What else do you see there, Dev? Are there any questions from the guys?
No, I'm not seeing any questions flow through any yet. So guys, there is an opportunity. If you got some questions for us, we will answer them. They don't have to be related to bonds, but obviously we'll have Careen from Uber on in a bit, and then she'll be able to answer some questions specifically related to the bond market. I think, Drew, while we're waiting for some questions to flow in, I think one of the things that people often ask and wonder about is how viable, how realistic 100% bonds. Fairly common, actually. We're seeing quite often that our clients that are property investors are getting bond application. The big thing to remember is it does depend on your affordability and your personal capacity at the end of the day. That's where it is.
Yeah.
But I've got 2 coaching clients. They're in a Okay, Careen's just stuck in a meeting. I've got 2 coaching clients. They are contractors, which generally banks don't like contractors, but even they're getting 95%, 98%. So then it's just that 5% that they have to go raise privately. So there is
Yeah.
definitely good affordability. The banks are lending. The only concern I have is where interest rates go in the next couple of years.
Yeah, and we do have some bets on that, Dave. So I think today's a prime session to bring that out. So quite a few of you are new to the coffee chat. Dave, can you explain to our audience what happened last year, and then maybe get your spreadsheet out?
No. It's not about what happened last year. Like 3 weeks after COVID started, back when we all thought this would be over in a month, Reserve Bank dropped interest rates. So we all said, hey, where do we think interest rates would be in 2 years from now? December 30th. And essentially we had the bet that Andrew thinks that we'd still be sub 10%, and I bet that we'd be over 10% by now. Yeah, I lost that bet.
And Dave owes me a bottle of whiskey, which I'll share with him when I see him next time.
When I'm up in Joburg or you're down in Cape Town, we'll settle that
There
bet.
we go. But now we set a new bet, and we want all of you to be part of the bet. So Dave's actually got a spreadsheet. We're also going to ask Careen where she thinks the interest rate is going to be going. Dave, I don't remember, but I think I said this year, December, will be like 8.25 or somewhere in the 8s, I'm sure. We'll have to have a look
Andrew,
and see.
your bet is on 8.5. I'm betting lower than you this time, so I'm more optimistic than you. I'm on the 8% at the moment.
Yeah, you might actually have a good, like, looking at it now. Yeah, it's definitely going up. The question is, how much is it going up? So please, everyone, put your bets in. Well, not bets, but, just put in what interest rate you think will be at as of the end of December. Jean-Paul, Nseba, Justin, Larato, all of you. Where do you think interest rates will be this year, at the end of this year in December, at the end of December? Will it be 7.5? Will it be 8? Will it be 8.5? Where do you think we're going to be? I reckon it's going to be in the 8s. That's my gut feeling. And I think 8.5 might be a bit rough. But let's see what everyone says. And then we'll see what Careen says when she comes on. She is just in a meeting at the moment, like you say, Dave.
I've got a comment over here from Tandeka. Tandeka's worried that if they approach the bank, they will be rejected because you're overcommitted. Tandeka, just apply. Worst case scenario, you get a rejection. It's not going to affect your credit rating. It's not going to reflect on you negatively to, apply for the bond. So, or speak to someone like Uber. Go chat to the Uber team, show them your exposure, and they can give you that advice on where they think it'll be.
Yeah, I agree, Dave. I was going to say the exact same thing. Don't go submit the application before you've spoken to someone like Uber, for example, and say, this is the income, this is my expenses. Don't try to hide anything, because the banks aren't silly, right? They will find out what, your exposure. So let the banks know about all your credit cards, all the expenses, be transparent on the application form. And before you submit it, Uber will say, actually, you won't get the bond. We need to pay this loan off, or we need to look at that, or they'll try to suit a specific project to your needs. So I wouldn't worry too much, Tandeka. Just speak to someone beforehand. Okay. Are there any questions from anyone, eh? I see there's a comment there from Khomotso saying, I'm looking to let out my house for student accommodation, then possibly go into development, which is cool. I'm looking to let my house out. What level of experience do you have, Khomotso? Are you getting started on a property and you want to let your house out and then look at building? Because remember, becoming a developer is another story. It's another conversation. There's a lot of things that can go wrong. Often figures look attractive on paper, but that's because a lot of people forget to run the numbers properly. They forget to look at the detail. They don't look at the downside like they should. Doing a small little flip of a 200,000 rand property versus a 20 million rand project, one small mistake can cost you millions. So I love the enthusiasm, and definitely go for it. Just make sure you're partnering with the developer. Don't try to do it yourself. Do it with someone else. Partner with them. Learn from their mistakes. Let them hold your hand through the process.
Yeah.
What do you think, Dave?
No, 100%. No. Just want to respond to Tumalang here. Tumalang, you can't hear me. Never mind. Don't mind me. Tumalang can't hear us, and I was going to tell them how to make sure they can hear us.
Okay, can you hear us?
Big brain. Don't worry, I'll reply via text. Shamo's got a question. Does NCA regulation apply when purchasing a property using a company? Um, so there is NCA regulation which govern lending with companies, less so, but the banks would, it depends on the bank. At the end of the day, the bank gets to apply a lot more discretion when you're applying as a company. As an example, if your company's got good affordability, then leverage, like being over leveraged, isn't necessarily something that they worry about. They'll obviously do their liquidity ratios and see how you're doing in terms of like gearing and everything like that. And if you don't understand what I just said, then don't worry, it's just part of speaking to your accountant and speaking to the bond originators. But Shamo, where you might run into some friction is if you're applying under a new company, your company doesn't have affordability, and you need to use your own affordability. That's when NCA is going to start looking at the transaction a little more carefully.
Excellent, I agree. Okay, let's see. It is 1:15, and how are we doing? There's another comment in there, Dave, I wanted to find, but where is it gone now? Just get a view on the market. So Larato saying looking to expand, interested to get a view on the market at the moment. Larato, where are you from again? Are you from Joburg? Okay, and you're looking to get a view on the market, definitely join us Wednesday night, Larato. It's a national public networking event where we get updates from all the partner sponsors. And I know, Dave, Bruno Samau is going to be talking about the new PPA, the PPA Act that's coming in on the 1st of February. He's been researching it. So for all the members on Wednesday night, he's going to give us the lowdown on what's happening. We've got some really cool partners and investors talking about the market and the property market here in South Africa, Larato. So don't miss the event. I'll ask Dave or the team just to post a link in the chat box for you, in the comments box. So join us for that, just to keep up to date, and there'll be a networking opportunity on Discord afterwards as well. And Dave, luckily, like you're saying, we will be going back to live events, which will be nice. Next one's in March, right? What date do we have there in March for our next live event? Or is it February, the premier event?
Premier events are in February. There's a Joburg and a Cape Town one. I'm just quickly navigating back there. In-person events, physical, real world. So Joburg's got a premier event on the 9th of February and Cape Town's got a premier event on the 23rd of February. So that's us going back to in-person events. It is a little bit daunting and a little bit challenging. The market's definitely kind of different in terms of hosting events, but we'll see how it goes. I'm looking forward to it. We got some new formats we're bringing to you guys. We really want to focus on you guys connecting. I feel like COVID kept everyone very separate, and we tried to do networking on Discord and tools like that. At the end of the day, this year, we want to make sure you guys are face-to-face, shaking hands after sterilizing, and definitely spending some time with actual human beings. So it'll be good.
Yeah, no, I agree. And I think, Dave, if you go back at 20, when was COVID? 2020, 2021. So if you look back at 2018 and 2019, you look at all the live events we ran across the country and how much business was being done, and the enthusiasm and the excitement and just deals that were happening. I'm not saying it didn't happen in COVID, of course it did. But for those of you that haven't attended Sapin Live public networking events, it's such an awesome evening. We do speed network, we do speed networking. You guys get to interact face to face with all the partners. So business partners, tough. Uber, Absa Bank, Intergen, Buna Samal, Marisha Robus, they're all going to be at the live events where you don't have to try connect with them on Discord. You actually get to have live conversations. You get to have a drink and sit with them. And it's priceless because everyone comes into one room. I still remember, Dave, there was these young guys, they pitched, it was a Soweto event, right? Soweto event there at the Soweto Theatre. And these two young guys, they stood up and they pitched for, I think, 800,000 Rand. By 11 o'clock that night, they'd raised 800,000 Rand in that room. And that's the power of live networking. And that's why Sapin exists. That's why we do what we do. So Dave and I know what the result is when we go back to live events. So just make sure, for those of you that are intermediate and professional members, make sure you join myself at the Joburg Premier event. And for those in Cape Town, join Dave in Cape Town. And then join myself in Joburg for the public networking event. I just know it's going to be great. So yeah, just wanted to let you all know that. Where are we? See, there's Maxon. Maxon, good to see you from Kuruman. Maxon, I know you're busy working with Nico and a deal in Durban. good luck, and I hope it goes through for you. There's Daniel Kazadi, who dropped me on Saturday, Daniel. So, Daniel was meant to meet me at the rugby on Saturday, but he couldn't come. He hadn't been jabbed.
Yeah.
So, unlucky. And the Lions lost the Sharks. Thought I'd just let you know. If there's any Shark supporters out there, the Lions lost, which I wasn't happy about. But it's good to be back to live events. That's at the stadium.
Sorry, Andrew, no. Don't glaze over that. How many times has this happened now where Sharks beat Lions? Just
Oh,
in the past 2 years, you guys are doing great against us. It's fine.
I can't. I've got no words, Dave. The Lions aren't doing that well, eh? We're a junior team. That's our excuse. Everyone here supports the Lions, right? Khomotso, Denzel, Tandeka, Lerato.
I'll meet you, Andrew.
Yeah, I'm by myself here, Dave.
Some questions are coming in. Unfortunately, McCreen's having some issues, so she will not be joining us today. We'll try to get on another coffee chat soon, but we do have some questions to answer. Question from Nadeem. Is there any way of speeding the process of appointing an executor of a family of a deceased estate? The appointment of the executor should be fairly quick. It's the resolution wrapping up of the estate that generally takes a long time. It depends on where you're stuck in that process. If there isn't a last will and testament, though, that could be delaying some process. But unfortunately, once people have passed, there's not much you can do to change the way they've left things for you.
Yeah,
Drew, your input on that one?
No, agreed. I'm not an expert when it comes to that, but what you've just said now is what I was going to say. So I totally agree. I know that, Shane, obviously through COVID, right? So Bruno Smart attorneys also deals with this, with wills and death and executors and stuff, and he's dealing with a lot because of COVID. So if there's any specific questions, I'd say connect with Bruno Smart through SAP and Connect, and go direct to those attorneys, eh?
100%. Drew, here's a question for you. Sorry, go for it. No, go.
No, just I just had a comment on. I spoke to two people today about properties in Sandton struggling to sell Sandton flats. And Dave, I remember in the one-day workshops doing the gross yield calculation. And when you look at how many properties are available, flats, apartments, 1 and 2 beds in Sandton, how many are there to let? I think it was like over 2,000. And I always said, like, how does the Sandton market keep going? Because there's thousands of properties to let and thousands for sale. And it's funny that I had 2 phone calls today going, I'm struggling to sell. I'm having to drop my price. But also through COVID, people moving out of Sandton because people working from home don't have to live in a city. So that's also, that's a typical thing there that you and I teach, where be careful of oversupply.
Yeah, 100%. And that's it, Drew. I 100% agree with your observation there. It's post-COVID. I think a lot more people are comfortable with remote work, and some companies are happy with it. Some companies aren't. But there are a lot more companies who are willing to let people work remotely, and that's going to mean that CBDs are going to be in a decline. I mean, I remember we were at the Alexander Forbes building a while back, and the building was a freaking graveyard. So if no one needs to live nearby for work, then why would they rent expensive apartments in Sandton? Simple as that.
Yeah. It's you've just got to be careful, and that's why when you do purchase properties, whether it be multi-lets or buy-lets, don't just assume that you're always going to have a tenant. You've got to make sure that there's a high demand. And one thing I learned early days, Dave, when I was investing in a brand new area that I didn't know, what my coach taught me to do was, Andrew, yes, of course, go speak to letting agents, go speak to agents, but do your own research. I used to place adverts, 2-bedroom flat for rent in this specific area. Of course, there wasn't a true advert, but I just put it out there to see. If my phone rang off the hook and I'd interview them, where do you want to stay? What's your budget? What are you doing? I'd ask specific questions. And if I found that there's a great demand, I feel comfortable, because what I've personally experienced and what the agents have told me is the same thing. But I've had experiences where I've placed adverts for multi-lets going, there's just no demand. I'm not getting any tenants coming through. And I didn't feel comfortable going ahead with the deal. I mean, Dave, have you done anything similar?
Yeah, I mean, at the end of the day, it's always been that stress testing for me. That's generally where most of those sort of deals fall away for me. It's if you're relying on a single tenant type or a single exit, then that's where you're going to struggle. So that's 100% true.
Okay, cool.
Sorry, I'm trying to keep track of the questions. Question coming through: what does it feel with banks when you're buying a plot and want to build a multi-let or flats? Puma, we'll let Andrew answer this one, but in short, you're in the development territory, so proceed with care.
So is a question, I want to buy land and then I want to build and develop.
Yeah, and how are the
Yeah,
banks
so
responding to that?
Yeah, so there's certain banks, business partners, tough would look at it if it's in specific areas, if it's if it's a specific segment in terms of student accommodation, or flats in the CBD or around the CBD. Those type of lenders, in terms of going to Standard Bank, and going to ABSA. Look, Dave, I've seen them grant. So if the numbers make financial sense, it depends if you start going into if commercial lending or resi lending. How big or small are we going? Depends on, are we dealing with home loans, which probably wouldn't happen. It'll probably be commercial, because if you're developing and building, I assume you're talking about 30 units, 40 units, 50 units. You'll be dealing with commercial, but you're probably better off in terms of flexibility dealing with business partners or dealing with tough, because they use that kind of thing, where they do lend on existing structures. But I've seen them, and I do know that they lend on vacant land, and they'll develop it. The area has to be right. And they don't just lend. Don't think they'll just lend to you. They back the jockey. Yes, they look at the land, they look at the opportunity, but more importantly, they look at you. How much experience do you have? They'll ask you, who is your power team? How much experience do you have as an investor? That's the difference between your standard banks. Even the commercial banks will ask the same questions. How much experience do you have? And if you want to develop something, if you've never developed anything and you haven't put a team together, but you have the best deal available, the chances are they're not going to lend to you because you don't have the experience. And that's where Dave and I always talk about, before you become a developer, build yourself up, get into buy-to-let, start doing flips, get into multi-lets, whatever it is, get experience in the property sector. Or if you get into a development early days, bring an experienced developer into your power team. Let him drive and let him have the conversations, because the banks will have more confidence in the developer who can say, hey, I've done 10, I've been in the industry for 20 years. You will take less profit. You'll take a smaller cut of the profit, but rather take less of kind of a profit and get into the deal to start building your credibility. But yes, there is funding out there for building and development, so I wouldn't worry about that. You should find out from business partners, what do they lend on, because they've got niches. Tough, what's their niche? Standard Bank, what's your niche? Find out what they lend on, what their criteria is, and then go find land in areas where the banks will lend on. So that's my 2 cents worth there, Dave.
100%. Maybe just for me to just add my 2 cents onto it. It's we're talking developments here. This is what you're getting into. So you have to understand a lot. There's a lot of information you have to be providing. There's a lot of planning you have to do just to apply. I would say if you're applying for a bond for the purchase of the land and the developments, you probably have to invest about 20, 30 grand in professional fees just to give the supporting documentation required. You need to do planning, zoning certificates. You need to go through a lot of processes just for that application. So 100% make sure you got someone on your side who's done it before, who can at least help de-risk that for you and help, give you that confidence. Yes, this is a deal you can do.
Yeah, 100%.
Cool. Next
And I
question.
think
Go for it.
I think, Dave, maybe just before we answer the question, the topmost one, why don't you take us through the events for the week? And if you have any more questions, guys, let us know now in the comments box. I know Dave's got a question there, but let's go through what events are happening this week, and let's see who's joining us on what nights or what days, and then we'll come back to questions.
Cool, 100%. So guys, like I said, every week we have our coffee chats. So bear in mind, we'll be back here next week, Monday. I'll tell you about that one in a second. But the big event this week is our first proper event for the year. We'll be having a online networking event on Wednesday. So the topic is student accommodation. Is it a viable strategy for the year? I know a lot of universities are still not in person, so it's going to be a really fun conversation. That's Wednesday night. Moving on to Thursday, Andrew and I have our coaching and legal support webinar. We've got our attorneys booked. We're going to get on and talk to you guys about what's happening, answer your questions. So if you're a professional member or an intermediate member, or you've got our foundation or flipping courses or any of our online courses, then you can join us for that one. That's Thursday night. Saturday, Drew's got his full day workshop, so from 9 until about 2 o'clock. That's specifically for beginners, guys looking to get into property. Lots of questions. A couple of the guys in the chat over here definitely want to be joining that. It's free. You can welcome to join us. We might start hitting venue capacity at the moment, so first come, first serve will be in place in terms of attendees. And then beyond that, maybe a little bit of a tease for next week's coffee chat. Next week's coffee chat is the 31st. We are currently planning on having the estate agent affairs board on there. We got the CEO of the EAAB to talk about the new Property Practitioners Act. So next week, Monday, 1 o'clock, will be a really exciting coffee chat. Cool.
Absolutely. And just let us know just before we do go back to questions, in the comments box, everyone, just put, are you a free member? Are you intermediate? Are you professional? Just let me know what level of membership are all of you. Just pop it into the comments box. Because remember, Dave, for Saturday, we just want the free members and the foundation members at that specific event. It'll suit you. I know it's going to help you move forward. If you're stuck with finance, if you don't know what the next step is, let's have that conversation where I can spend hours with you on the Saturday. So that is a Saturday coming up. Okay, great.
Cool.
Let's
Answer the
move
question
on.
from Komoto. I'm still making my way into property, definitely looking to partner with a well-experienced developers. You were looking at IGRA, what are our thoughts? So we won't comment directly on IGRA, just because it's easier to do it that way. We will talk about some developers as a whole. As a developer, as someone who's done developments in the past, my lesson to teach you is that developers are very good at extracting as much value out of investors as possible and property buyers as a whole. So you're not going to buy a property where there's equity. You're generally going to buy a property where your value is going to be fairly flat over the long term. And then you've also got sort of that ongoing maintenance. So what experienced developers, yeah, some of them have a really bad reputation in terms of how much value they provide in the long term, how well they manage their complexes. So that's a big concern for me. Andrew and I are generally advocates of going and buying distressed properties, or at least buying a property that's pre-owned that you can find that value and you can buy a property below market value, so that when you're buying, you're making your money and you've got some equity in there. Drew, your side of that?
Yeah, I agree 100%. So it depends what you're trying to achieve. Obviously, if you become the developer, that's where the money really lies. Because the person who sold the land makes his or her money. The person who develops and sells to agents makes money. The agents make money. Look, and I think it depends on the buyer, right? Because when you go buy off plan, if you buy at the right time, you might actually get a good price. And if there is capital growth, you could make some money. And if you apply, Section 13(6), if you apply that strategy long term, you might see some return. So it depends what you're trying to achieve. Would you like to be a full-time investor? You active, you're a developer. All you do is property 24/7. Yes, work your way up to becoming a developer. But Dave, I was with the rugby guys, last week, and they said again to me, they're like, Andrew, we don't have any time. They get one day off, but that one day off they have, it's for family and it's for just not working. So that's why they prefer off plan and new builds, because they don't have the capacity to do renovations and new builds and developments. So this comes down to, where are you as an investor? What do you aspire to be? If you're a new investor and you want to become a developer, great. But Dave, that's probably a 3 to 5 year plan. We always say, get to know the market. Make some basic mistakes. Yeah. Make some basic mistakes in property. Understand what it's like to lose some money. Get out there, get your hands dirty, but get out there and make some money at the same time. And then when you feel the confidence and you've got the right partner, then perhaps jump into a bigger project. Yeah. That's my 2 pennies worth, huh?
But 100% true. Like I think I wouldn't buy new build unless I was aiming for a Section 13(6) sort of leverage, which I'm probably wrong because I don't really invest that way. But what Section 13(6) requires that you buy 4 or 5 properties, somewhere around there. They all have to be new within a certain period of time, and then you get your tax benefits 5 years from now, 7 years from now. So it can work for some people. For most people, it's not going to be the most viable strategy. You're going to have better cash flow if you buy a property in a decent complex that's already been built, it's already established, and already has a track record with a good body corporate.
Exactly. Yeah, and everyone's different, right? Everyone's different. Okay, what else you got there?
100%. I think this is one of the last questions we have, and then just some general comments. The seller wants the deposits. What are the pros and cons with the deposits to secure the deal? We're busy with the memorandum. If I can get them to sign, the deal will proceed. So there's 2 types of deposits that we generally talk about. There's the deposit to finish your bank payment. So the bank only lends 90%. You've got to get your 10%. Otherwise, there can be conversations around securing deposits. I generally avoid them like the plague because they just cause admin and fights. But at the end of the day, Drew, my advice would be just make sure that you've got the terms of when that deposit's refundable to you and when it's incurring fees and when it's incurring penalties. Understand that process very carefully, sit with your attorney and go, what can go wrong here, and when do I get my money back, and when do I lose my money?
Yeah.
Make sure that every one of those conditions are laid out in text.
Yeah, absolutely. And I think, Dave, in terms of deposit, Michael, I've had situations where I'm there with the seller, it's a private seller, and there's no agents involved, and they want what they call a deposit. But actually, what it is they need to release equity. So it depends. Is this a traditional deposit that sits in the transfer attorney's trust account where you're going to earn interest? If that's the case, that's, I won't say it's standard, but people do it. You put 10% down, it sits there. This is why it's always better to use your own attorney. So things do go, pear shaped. It's sitting in your attorney's trust account. But if it's a straightforward deal and it's 10% down, for example, it sits in the seller's transfer attorney trust account, and there's nothing creative. There's actually nothing wrong with it if you have the cash, but you don't have to give it. Or are you sitting with a motivated seller where, in order for them to move out the house for the deal to happen, you've got to give 100,000 Rand or 50,000 Rand? Again, yes, I've done that before. I've been stung once. I'm not going to lie. But all the other times I've been fine. And there's a lot of lessons I learned through that, from going through the attorneys to who you pay that money across to. So yes, you can give equity up front as well, which is seen as a deposit in sellers. I'm giving you a deposit, but it comes off the purchase price. But Michael, with that, when it comes to doing that type of deal, reach out to us, because I've had a lot of different experiences in that. It's a great motivational tool, because I'm saying, hey, I'm giving you less money, and my purchase price is less than that buyer. However, my terms of my offer to purchase are more favorable than that guy's OTP. And I've actually had that, Dave, where my offer was less, the other offer was higher, but my offer was to release some cash up front. So I was taking a bit of a risk, but I got the deal.
Yeah, I think the big question to ask yourself is, how is this going to go wrong and how am I going to lose my money? As long as you're planning and understanding your risks, then it's something you can do. But definitely risks, like Drew said, he's been stung once. I think I've not been stung too badly. The worst I've done is lost like 5 grand up front because I paid for moving fees. But yeah, there's definitely room to be hurt and burnt over here. Even an interesting example, if you were helping people pay for movies, and this is the lesson I learned, I offered a couple of grand up front to help pay for moving costs and those things to get them out of the units. And then they went to spend the money on something else. So in future, since then, if I do that, I'm paying the contractors directly for the services that are being provided to that homeowner. And there's obviously invoices and receipts, and I can prove that I did it. But at the end of the day, I don't like to give people who are in poor financial situations money to make good financial decisions. You can't always rely
absolutely. And then they come back to you, David, and say, "Oh, I can't move because I can't move my stuff out," and they put you in the corner. Another example I had, Dave, where everything did go through, but a lesson I learned years ago was, if you're going to give money up front, 100 grand, 200 grand, whatever it might be, before it goes through the attorney's account, ensure that you've sat down with the buyer and the attorney in the same room, that the seller has signed all the documents they need to sign, so that if that seller decides to run with the money, it doesn't matter if you or I never see them again, because all the documentation's been signed. The attorney's they've been verified by the attorney. You might even want to get power of attorney if you need to go to municipality or do anything else, and you want to ensure that you're getting with vacant, that the tenant or the owner, in a lot of cases, the owner has moved out. If I've got the keys to the property, they've signed everything they've got to sign, my gut feeling is good, the attorney's happy, that's when I'll say, here's your 100 grand or here's your 200 grand. So keep that in mind when you're doing it. Cool.
Before we move forward, we're going to talk about the free intermediate members. Guys, if you are a free member or an intermediate member or foundation member, you should definitely be joining us on Saturday for that workshop to help you get you started. Or if you still feel like you're a beginner and you really have no idea what your first step in property should be, it should be a good one. We are running out of time, so I'll try and rush through on the next couple of questions.
No worries.
And we'll see how we get through it. But unfortunately, I can't guarantee we'll answer all questions. If we don't get to your question today, remember, we're back here next week. Or if you're a member, you can join us on Thursday night. Mpume is asking a question: is it worth purchasing a property 10% under market value, then spending money on developing units, resulting in positive cash flow, but then you're overcapitalized? Mpume, not enough information to go off of, and I think Drew will agree with it. way too much. And again, we're talking about developments here, which Andrew and I don't like discussing too much because developments is not an easy game. It's not the kind of game that I think new investors should be getting into.
Yeah, and I think if you're over capitalizing, if you've seen the market value by 30%, so it's worth 10 million. So you're saying 30%, so around 30 million plus minus, or 30%, so even more than that. I'd be uncomfortable, Dave, wouldn't you? I mean, it's one thing over capitalizing by 2, 3, 4%, but by 30% to me sounds a bit much, eh? What do you think?
I mean, it's one of those things we talk about forced appreciation. Depends on what you're doing. If you're
Yeah,
putting like a self-standing unit in the back garden, that can add to the market value of the property, maybe, but you will have a challenge offloading that into the open market if you're overcapitalized. You see it
yeah,
all the time. People go and spend too much money on refurbs, and then they try sell their property 10, 15% above the market, and the banks
yeah,
don't see the value, the buyers don't see the value, and you're just stuck with a property where you've overinvested. So, but again, depends if you're going development, because you could also take this and say, well, this is now commercial building, and we can get going concern valuation, but that is a full hour
yeah,
conversation.
yeah. Exactly, exactly. There's a question here from Bapele, Dave.
Yep, you
Bapelele.
can quickly hit those. And ask quick one. Please explain what a company to be formed means in the OTP. Drew, you do
So
this
what
every
that
week. So.
means is, yeah, exactly, man. So basically, when you sign an offer to purchase, it's either going to be in your personal name. So on the offer to purchase, it would say Andrew Walker, ID number, is buying the property, and the seller is Joe Blogs. But I don't want to buy my personal name. I want to buy in a company. But now I'm buying in a company that I might be doing a joint venture with someone, or perhaps I'm a beginner investor and I'm starting my journey. And I don't have a company, but Intergen has told me, Andrew, buy through a company. But I don't have a company, Intergen. So all I say here is I go, on the offer to purchase, I say, a company to be formed. So I'm telling the attorneys that I'm in the process of setting up a company. So I need to go set up a company. And so what you do is you sign the OTP, you give it to the attorney and say, attorneys, I've just signed an OTP. It says you're a new company to be formed. Please, can you go form an OTP? And they'll more than likely go get a company off the shelf. And once we've got the details of that company, we've got the registration number of the company, the name of the company, we go back and we put all the details in there, and the attorneys will do that for you. Okay, so hopefully that's short and sweet. There's
100%.
a
I'm
few
going to do
others
one
there.
more text reply. You can hit this one from Kosomoto again. How can I ensure 100% fully let, student let for my property and keep it consistent throughout the year? So for one, I'll remind you about our event on Wednesday.
Yeah,
Put the link in.
absolutely. Yeah, that's a good question, and I think that's definitely a question for Wednesday night for all the experts in student accommodation. Um, I think it's going to be. I think you're going to struggle to get 100%. Look, I've met investors. Like Andre down in Cape Town, Dave, who's his students are from the medical industry, and he's getting 12-month leases from mom and dad, and he's achieving it, right? But it's very, very difficult. There's not many people that I've spoken to, that I've met, that I've heard, that have got 100% occupancy. Yes, like I said, Andre, there's a few guys I've come across getting either 100% occupancy or very close to it, but not many. And it's not something which I've personally played in that space. But that is a great question for Wednesday night. So make sure, Khomotso, in fact, we'll take this question and we'll ask it to Dana, to Malalo. We'll bring it up in conversation. We'll discuss it on that evening. I mean, Dave, do you have any comments on that yourself?
Um, yeah, I mean, Drew, you pretty much touched on most of it. It does depend on the class of the student, and unfortunately, it's just a reality. It's different universities have different calibers and different LMSs of students. So if you're at an institution where the affordability is a bit on the low side, then you're going to have a little bit of a harder time. There is the NSFAS route. You're not going to have 100% occupation because they're only paying 10 months of the year, plus there's the delay in payment, but they are a lot more reliable. I think this is common. A lot of people neglect to remember that when you're applying through NSFAS, they only pay for 10 months. Students only need a place for 10 months. The way that I attain high occupation rates on my student accommodations is by location. All of the two student accommodations I have at the moment on a rent to rent, they're spitting distance from the engineering campus here at UCT. So I've got UCT engineering students, which means generally the affordability is there. They're generally a lot more likely to stick through the year. I don't take first years, I only take second years. And one of the things I also do is I also collect a full year's rent up front. I make them sign an annual lease. They pay it up front, which most people can't afford to do. So again, it depends on who you're dealing with. And then obviously what if they want to leave, it's gone. They've paid for the year, and I just incentivize it that way. But again, I'm not charging them for a full 12 months. I'm charging them for 10 months. I just average it out for myself to make sure that my averages work and I can pay my expenses. So
exactly.
it is quite complex. It can be very difficult, practically nearly impossible if you're going to try to get them to rent for 12 months.
Yeah,
But
yeah,
maybe
agreed.
my one hint is avoid first years, because first years drop out.
Yeah. Risk. So it's understanding the risk in the student accommodation sector, and it is a sector by itself. And if you are to go down that road, do yourself a favor and learn as much as you can, and speak to Dana, speak to Molalo, and speak to all those experts that are dealing in that field, and they will be available to you on Wednesday night. Should we quickly answer that question, Dave, there by Zukile? Just I'll give my 2 cents worth very quickly.
Cool.
If you're running successful coffee shops, I think the question is, if you're running any successful business and that business is making profits, how would you use the profits to buy investments? So obviously, if you're making profits, there's tax involved, and as any entrepreneur, how do I legally pay the amount of less tax as possible? So that's an intelligent question. More than likely going to be setting up a separate company. Entergen is going to show you how you can move profits around. I don't quite know what your structure looks like, but there is a way where you can do it. And it's a great question, because that's what lots of successful business people do is they get profits. They use the profits to invest into property, which then generates a second income stream. To be fair, for most people, depending on your structure, it's quite a simple process. But reach out to Entergen through SAP and Connect. Speak to the guys, get their advice with regards to how that actually works. And they'll guide you. Okay. So Dave, that's just a quick one.
Yeah, I think my only other thing to add to that, and to put in the text response, you could also look at fractional ownership. Depends on, you say profitable. Profitable could be 10,000 rand a month. Profitable could be 100,000 rand a month. So it depends on where you are on that scale. But if you're feeling like getting a bond under your company is not viable, then you could look at a fractional ownership. Platforms like Global Invest will allow you to invest fractional ownership. So I think generally about $1,000 minimum in a property transaction overseas. You get international exposure, which can be really good. But again, is going offshore the right move for you? There's a lot of nuances to that. But fractional ownership is a really nice opportunity to take some cash flow and invest it somewhere else.
Yeah. Agreed. Different options. And I guess, Dave, that's where, that's why we have portfolio reviews. That's why we have blueprints, for people with portfolios or successful business. Andrew, I've got this business, I've got that business, I've got this property, my residential. And 9 times out of 10, they're in the wrong structures. That's where Entergen, that's where the coaches, that's where we all get together and we start moving your wealth around so that you're protected and you pay less tax. That's the whole idea. Okay, cool. I think that's a wrap, Dave.
I think we're good. So guys, just as a reminder, we're back here every week. Next week, we will be speaking to the Estate Agent Affairs Board about the new Property Practitioners Act, which will affect every property buyer, seller, owner in some way, shape, or form. So you definitely want to start getting up to speed with the PPA and considering whether or not you need to be registered as a practitioner. So very important coffee chat next week.
Definitely. All be there. Anyone in property, estate agents, attorneys, service providers, architects, anyone that that's unsure of what's happening, we're going to have the CEO of the Estate Agent Affairs Board. It's going to be a really, really good conversation, probably more like an hour at 1 o'clock next week. Thanks, Dave. Thanks, everyone. Have a great week. We'll probably see most of you on Wednesday night and Thursday night, and a portion of you on Saturday. Awesome, guys. Have a great time. And Dave, we'll see you next week.
Perfect. Thanks, guys. Thanks, Drew. Cheers.